I actually got the inspiration for this video through examining my own shortcomings over the past couple of weeks, trying to pass my first funded challenge. And after looking through my journal and realizing that I have more winning trades than I do losing trades. So why is it that that hasn't necessarily been able to materialize itself over percentage gains within the marketplace? And it really comes down to, like the title of this video suggests, the difference between being a good analyst and being a good trader. That's gonna be a good thumbnail. Good analyst, good trader. But yeah, it really comes down to the difference between being a good analyst versus a good trader, because I realized that my winning trades, I have more winning trades than losing trades, right? And if we actually break down what is a winning trade is a trade in which you got the correct direction on the marketplace for a specific price run, and you were able to capitalize on a section of that price run based on your analysis, right? But what is a good trader? A good trader is someone that is able to manage risk, execute, and do all of those things to a high level, as well as analyze. See, I realized that I have good analysis. In fact, a lot of the time my analysis is actually correct. One sec, let me actually close this window. I just realized it's probably getting in the way. One second, let me get this off for you guys. But as I was saying, the difference between a good analyst and a good trader is that a trader is able to manage the risk, execute flawlessly, or not necessarily flawlessly, but to a high level, and basically live to trade another day. Starts with his thesis, ends with his result, accepts his result, and moves on to the next thesis. That's what a good trader is. And what I realize is that my shortcomings is not in the area of being an analyst when we talk about the trader's package. My shortcomings are within the area of being a good trader. Specifically, we're talking about trade management. Because if we look at it, when I look at my winners anyway, in my trade journal, I see that after I will have journaled the trade, it will have hit full TP. But before that, I would have taken like a partial and then like been stopped at break even, or closed too early, or something of the sort. And really, what my next step is, and this, a lot of you might be able to relate to this, what the next step is going to be, really, is being able to manage my trades at a high level. Because I can see the drawn liquidity, so my analysis is there. I can enter, so my entry and my risk management is there, right? I can exercise the discipline necessary not to over leverage or over trade. So those are things that I can do. But what's going to really separate myself from a lot of unprofitable traders is that I need to be able to manage my trades better. And instead of looking for my full analysis to play out, looking at maybe scraping more off the table at partial levels and leaving less to run in the beginning, just so I can achieve that level of consistency. Because I usually do hit my partial target. Anything I'm targeting for a partial, I usually hit it. So if I were to take more off on my partials, then that's immediately a way that, you know, I can start to see more of those wins that are in my trade journal materialize into actual percentage gains. And if you guys are having that issue too, that's something that you guys can think about. Instead of taking 50% off at 1 to 2 or 50% off at 1 to 3, consider taking 80% off at 1 to 2 or 80% off at 1 to 3, and then leaving that 0.2% to run. You know? It's something to really consider, because then it doesn't hurt as much, right? When you know that majority of the trade is already finished, and now you're just looking for, you know, your final objective was 0.2. You know, you're not emotionally leveraged onto that. Like, you're not latched onto it emotionally. And the more you can, and as you desensitize more as you go along in your journey, what you can actually start to do is you can actually start to leave 0.3% on, 0.4, and 0.5. Until once you get to that 0.5, now you're back at what you wanted to do, you know, which is taking off that 50% at that partial level, right? But in the beginning, taking that 50% off and then trying to look for further upside, it can do more damage than good, because it's going to lead to you over managing the trade, possibly, if you're like me, and basically meaning that your analysis and your strength in your analysis doesn't necessarily pan out into your strength as a trader. And that's something that I actually realized this morning when I was thinking, and I was like, something needs to change in the management of my trades so that what my journal reflects, because my journal reflects the journal of a profitable trader, right, in terms of the trades I've hit TP, etc. But I need that to translate into actual percentage gains, and it all comes down to paying myself more at, you know, these targets. So that's something that I'm going to be incorporating going into this week. And if this is something that you guys can relate to, I hope that, you know, this helps you guys too. I hope that you can understand that there's a difference between a good analyst and a good trader, and you need to actually break down what is it that is going on inside of your trading that can allow you to make or break. What is it that you can fix that can allow you to achieve consistency? Think about it, because a lot of us know what is it that is going wrong. We just don't want to take the time to actually think about it. And, you know, that's a huge part of trading. Optimization of your trading plan, of your strategy. It's a huge part, you know. It's a part that isn't discussed enough, I don't think. So, going into this week, if this is something that you relate to, try it out. Try and take more at your first profit target, and then let a small percentage run until you graduate to increasing that percentage that it's running. And then see what works for you over a large sample size of trades. But with that being said, today is now Sunday. Next week, we're going into the battlefield. We're going to prepare for war. We're going to make sure that we wage war, not with the markets, but with ourselves. Because at the end of the day, the markets are going to move how they move. And the market is also always correct. The market is always correct. So it's up to you to ride that wave of institutional sponsorship in the way that the market is going, and for you to see it. So you're not going at war with the markets, you're going at war with yourself. And it's funny because a lot of us get confused with that. And I know this is sidetracking, but it just made me realize a lot of us get confused with that actually. Like, the difference between going to war with the market and going to war with yourself. Because if you understood that you were going to war with the market, right? If we understood that we're actually not going to war with the market, sorry. If we understood that we're actually going to war with ourselves, then instead of revenge trading once we lose a trade, we would, let's say, take it out on ourselves in a different way. Let's say, for me, it's the gym. I go and absolutely, wreck myself in the gym. But sometimes even I fall into that, let's say, mindset that the market has just moved in a way that is incorrect, as if like my trade was absolutely and utterly supposed to pan out in the way that I thought it was supposed to. And that leads to revenge trading, trying to take vengeance on the market. And that's wrong. What you should try to do is try to see, did you deviate from your trading plan? And if you did, take that vengeance on yourself and understand that you need to take revenge by following your trading plan and coming back better. And if you did follow your trading plan and you still got stopped out, then be happy, because you understand that you found your edge, and over a large sample size, this is just a bump along the road. In the grand scheme of things, a bump along the road, because over a large sample size of trades, you're profitable. But anyway, yeah, this was just my thoughts for Cycle Sunday. It was more of a reflection this Sunday, getting our minds right for the week ahead. But until next time, ready.